Hello dear students, welcome to the online lecture series. So we were doing the methods of valuation of goodwill. Till now I have done average profit methods of finding goodwill. We have already solved super profit method as well as the annuity method. Okay, now in this particular lecture we will be solving or we will be finding the value of goodwill through capitalized method. Okay, capitalized value of method. So under capitalized value of method we have got two types of capitalized value of method, that is capitalized of average profit method and capitalized of super profit method. So from both the ways we are going to find value of goodwill. Okay, so here is the capitalized value of method. As I already told that we have got two type of capitalized value of method of finding goodwill, that is capitalized value of average profit and capitalized value of super profit. So capitalized value of method depends upon the average profit and super profit. So you should know how to calculate average profit and super profit. So if you don't watch previous videos, please go through that, then only you come to this video. If you have already watched, then please ignore those videos and please stay with me. Okay, now before solving before finding the value of goodwill through capitalized value of method with this type of this thing, we have to first understand how it works, how capitalization value or capitalization method works. Okay, so let us understand this. Suppose we have got two businesses, A company limited ltd and B company limited ltd. Okay, so, and this one is existing company. Supposing this is 5 years old business and this is just 1 year old business. Okay, and both of them have invested same capital last year. Suppose capital invested by A company is 12 lakhs and capital invested by B Ltd is 12 lakh. Okay, now after 1 year the profit earned by the B limited company, new company, is 2,40,000 because the normal rate of return is 20%. Okay, so it will only earn what normal rate of return, and that is if you if you multiply by 20 divided by 10 100, it will be 2,40,000 only. Okay, so this new company is earning 2,40,000. This is normal rate of return. But if you see the profit of the existing A company limited, then it is earning 3,50,000. So it's more than normal profit. How much more? More than 1,10,000. So what is this? This is super profit. Okay, so this is super profit. How it comes? It is because of the goodwill of this existing business, right? Now in this particular this thing we have to find what goodwill. This, since this existing company has already earned more than the normal profit, so how are you going to find the goodwill? How much goodwill it has got, so that with the help of that goodwill this is earning 1,10,000 more profit than this new company. So the formula is goodwill is equal to super profit into 100 by NRR. Okay, NRR means normal rate of return. Okay, so super profit is how much? Our 1,10,000. See, more two, if you deduct 2,40,000 from 3,50,000, it will be 1,10,000. So this is super profit. So super profit into 100 by NRR is 20%. Okay, so 20. So this figure is 5,50,000. So this particular business has 5,50,000 what? Goodwill. Okay, goodwill. Because of this goodwill, this company is or business is able to earn extra profit or super profit of 1,10,000. Okay, so in this capitalized method of valuation of goodwill, what we try to find out is how much this new existing company has to employ capital so that it has to bring profit of 3,50,000 like this existing company. Okay, कति चाहिँ इन्भेस्ट गर्नुपर्छ 12 लाख इन्भेस्ट गर्दाखेरि चाहिँ यति नै यसको यति मात्रै आयो भने चाहिँ यसले 12 लाख आउँदाखेरि त 2,40,000 मात्रै आएको छ भने चाहिँ कति बेसी गर्दाखेरि चाहिँ यति 3,50,000 आउँछ. That we have to find. That means how much extra capital this particular new business has to invest so as to bring this particular profit. So त्यो चाहिँ निकाल्नु पर्छ. त्यो चाहिँ हामीले गर्दाखेरि चाहिँ कति चाहियो भन्दाखेरि चाहिँ एक्स्ट्रा क्यापिटल इम्प्लोइड चाहिँ 5,50,000 गर्नुपर्ने रहेछ. If you invest this along with this, then only the profit of this new existing business will be 3,50,000. You can see here 1,20,000. This 12 lakh is your this thing capital investment of new business, plus if you add the goodwill it will be 17,50,000. Okay, so when this particular company or business invest 17,50,000, it will earn profit, that is normal profit 20 by 100, so it will be 3,50,000. So it has come 3,50,000. Okay, so this is all about capitalized value of profit method of finding goodwill. So we will be solving one question, okay, so that you can be more clear about capitalized value of profit method. So capitalized method, first before solving the question, let us see the formula for calculating or valuation of goodwill through capitalized value of method. Under capitalized value of method, as we have already seen, we have got two approaches, that is from super profit method and from average profit method. Okay, if you are finding value of goodwill under capitalized method through super profit, the formula is goodwill is equal to super profit into 100 by NRR. So this one is what normal rate of return. Okay, you need super profit and NRR will be given. Okay, if you put super profit here, you easily calculate the value of goodwill under super profit method. Okay, so you need to know super profit. Okay, then another approach is what? Average profit, capitalized of average profit. The formula is goodwill is equal to capitalized value minus capital employed. Capitalized value minus capital employed. Okay, so capitalized value, how are you going to find then? Capitalized value is average profit into 100 by NRR. You should remember these formulas. Okay, capitalized value is equal to average profit into 100 by NRR. And this capital employed is what? This is capital employed means net asset. Okay, this is net asset. After deducting liabilities from asset, it will be net asset. So that net asset is your capital employed. Okay, so by using this two formula, we are going to solve question. Fine. So here is the question from capitalized value. Okay, available specific are the respect of the business carried on by a firm. Okay, the profit for the past 4 years are 2017 profit, 2018 profit, 2019 profit, 2020 profit. And the other adjustments are the firm has average capital invested of rupees 1 lakh. Okay, so average capital employed is given. The pure rate of return on capital invested is 8% per annum and risk premium expected is 2%. Okay, pure rate of return and is given 8% and 2% is what? Risk premium. So this is normal rate of return. Okay, how are you going to find normal return? You have to add this risk premium along with pure return. That will be 8% plus 2%, that is 10%. 10% is normal rate of return. Okay, 10% you have to add. If you add both, it will be 10%. This is NRR. Okay, then next one adjustment is the landlord has decided to enhance the rent of the shop building by rupees 5,000 per annum. So landlord has decided to enhance the rent of the shop. That is, this is the future what expenditure. So you have to deduct this. Okay, so calculate the value of goodwill of the business of super profit method. Now you have to find out the what, or you have to calculate the value of goodwill through super profit method. Okay, let us do it. Now we are solving the equation of capitalized value through super profit method. So goodwill is equal to super profit into 100 divided by NRR, normal rate of return. Okay, so what you need is NRR is given 8 plus 2 10%, 100 is there. So super profit you have to find. So how are you going to find super profit now? So for this you require the formula for super profit. As you already know that super profit is equal to average profit minus normal profit. So you need to find average profit and normal profit. Okay, so first you have to find out the average profit. So how are you going to find out average profit? So here you can see average profit is equal to total profit for the past years divided by number of years. Okay, number of years. So let us see the profits of 4 years are given: 15,000, 16,000, 18,000 and 20,000 for 4 years. So simply you have added this 15,000, 16,000, 18,000, 20,000 divided by number of years is 4. So 4, it will be, when you calculate all this thing, it will be 17,250, right? Okay, now if you have to see whether adjustments are there or not. Okay, as I have already told that, well, finding average profit, if there are abnormal losses or abnormal gain, you have to deduct or add. Okay, right? So here the firm has average capital invested. This thing is not come here. Then the pure rate we have already done. The landlord has decided to enhance the rent of the shop building by rupees how much? 5,000 per annum. Okay, so 5,000 per annum is your what? Your this thing future expenditure. So that should be deducted. That should be deducted from your profit. So see, adjusted average profit. We have average profit. Now we have to adjust this. So since this is your future expenditure, you need to deduct this. Okay. So usually how we used to deduct this losses, we used to deduct from different their respective years, right, of profit, like this, from all the respective years. But this particular 5,000 is what rent for every year. So we can in one go we can deduct by this way, like adjusted average profit. Okay, you can deduct from average profit only. After calculating average profit, you can directly deduct like this. Okay, no need to deduct from individual years. So we have got average profit this. So this one is rent for every year. So after deducting this is what your adjusted average profit. That is 50,000, right? Okay. Now we have found average profit. Now we have to find out normal profit, since we have to find for super profit. So normal profit is equal to average capital employed into normal rate of return. Okay, so average capital employed is, if given in the question, you can directly write. Otherwise you have to find out like this. There are many approaches I have already discussed with you. Okay, so since in our question average capital employed is already given, okay, so no need to calculate average capital employed. See, the firm has average capital invested of rupees 10 lakhs. Okay, right? So normal profit is equal to average capital employed minus normal rate of return. So average capital employed is, sorry, this is into, okay, this is 1 lakh is your average capital into normal rate is 10% divided by 100. Okay, so it will be 10,000 is your normal profit. Okay, now how are you going to find out super profit? Super profit is equal to average profit minus normal profit. Okay, average profit minus normal profit. So super profit is average profit minus normal profit. Your super profit, the average profit or average adjusted profit is 12,250 and your normal profit is 10,000. When you deduct 10,000 from 12,250, it will be how much? 2,250. This is your super profit. Now easily you can calculate the goodwill. Goodwill is equal to what? Under average capital method, what is the good? So what is the formula for calculating super profit? Goodwill. Goodwill is equal to super profit into 100 by NRR. Okay, under capitalized method, right? So goodwill is equal to super profit into 100 by NRR. So we have got super profit 2,250 into 100 by NRR is 10%. Okay, 10%, because NRR is given in your question. Okay, that is how much? NRR is 8 plus 2, 10%. Okay, so when you calculate, it will be 22,500. 22,500 is your goodwill through capitalized method of super profit. Okay, now we are going to solve one question from capitalized of average profit. So we have to find the value of goodwill through capitalized value of average profit. Okay, so your formula is average profit is under average goodwill is equal to capitalized value minus capital employed. Okay, so you have to find capital value, capitalized value. Capitalized value is equal to average profit into 100 divided by NRR, right? So let us find what you need is capitalized value minus capital employed. So how are you going to find out capitalized value? Capitalized value is average profit into 100 NRR. Let us solve one question. Okay, so capitalized of average profit. This is the question. Suppose capital employed is rupees 1,80,000. Average profit is rupees 20,000 and normal rate of return is 10%. Okay, so you are finding goodwill through average profit of capitalized method. So formula is goodwill is equal to capitalized value minus capital employed. So you need capitalized value, that is average profit into 100 by NRR. So you have to find average profit. So average profit is given, that is 20,000. Okay, 20,000 into 100 by NRR. NRR is 10%. Okay, 10%. So when you cut this thing, it will be 2 lakh. 2 lakh is capitalized value. Okay, and the goodwill is equal to capitalized value minus capital employed. So capital employed is given or not, you have to see in your question. Capitalized capital employed is 1,80,000. Okay, so goodwill is equal to what? Goodwill is equal to capitalized value minus capital employed. So capitalized value is 2 lakh and capital employed is 1,80,000. So when you deduct 1,80,000 from 2 lakh, it will be 20,000. So 20,000 is goodwill from capitalized value of average profit method. Hope you understood this particular question. Okay, if you don't, you can ask me. Okay, I'm there to help you out. Okay, so this is last lecture from valuation of goodwill. After this, I'm going to start valuation of share. Thank you very much.